I want to teach you the best settings of Kaufman Moving Average and Exponential Moving Average. You're going to learn a very accurate trading strategy based on these settings, so make sure you watch this video until the end and let's get started. But before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, first let's add the Kaufman Moving Average. But if you don't know what Kaufman Moving Average is, it's an advanced moving average that was developed by Kaufman, and it has the ability to adapt to the current condition of the market. So based on the degree of the volatility in the market, it becomes faster in trending market and it becomes slower in range or sideways market. So you will have a moving average that perfectly responds to price action. Let's add the Kaufman moving average to our chart. Here we click on indicators and we search this one, Kaufman's Adaptive Moving Average, which is a built-in indicator on TradingView platform. Alright, this is Kaufman Moving Average that is added to the chart, but we need to change its settings so it will be optimized for the trading strategy that we're going to use. So here we go to the settings of the Kaufman Moving Average, and here for the fast length we set it at 5, and here for the slow length we set it at 55. Then we go to the style tab and we change the color to green, and we also increase the thickness of the line so it will be better visible on our price chart. Alright, we're done with the settings of Kaufman Moving Average, and now we need to add 4 exponential moving averages. But don't worry if you are using free version of TradingView, because we can have 4 moving averages in one indicator, and for this purpose here we just click on indicators and we search ribbon, this one, moving average ribbon, which is a built-in indicator on TradingView platform. When you add this indicator, 4 moving averages are added to the chart, but we need to change their settings. So here we go to the settings of the ribbon, and first here in the inputs tab, here we set them on EMA because we need exponential moving average. Then here for the first EMA, we set the length at 5. And for the second EMA, also we set the length at 5. Then here for the third EMA, we set the length at 13. And for this EMA, we also set the length at 13. Then here for the source of calculation, for the first EMA, we set it at high. And for the second one, we set it at low. So here we have an EMA with length of 5 based on high, and another EMA similarly with length of 5 but based on low. Alright, here for the third EMA, for the source of calculation, we set it based on high, and for this one based on low. So here we have an EMA with length of 13 based on high and another EMA with length of 13 based on low. And now we need to change their colors. Here for the first EMA, we set the color to white. For the second one, also we set the color to white. For the third one, the color should be set to orange. And for this one, also we set the color to orange. And finally, we go to the style tab and we increase the thickness of the lines so they will be better visible on the price chart. Alright, we're done with the settings of these moving averages, and now let me teach you how you can find accurate buy-sell signals based on these moving averages with the special settings and combinations that we did. But before that, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, so here we have 5 moving averages on the chart. This green line here is a Kaufman moving average, which we set 5 for the fast length and 55 for the slow length. Then we have these 2 white lines here, which are EMA with length of 5 based on high and low. And we have these 2 orange lines here, which are EMA with length of 13 based on high and low. As you can see, the 2 white lines have created a channel on the chart, which from now we call it white channel. And similarly, the 2 orange lines also have created a channel on the chart, which from now we call it orange channel. We're going to use the green line for identifying the major changes in the trends, and we're going to use the white channel and orange channel to find buy-sell signals inside the new trends. Let me show how you can do it. This trading strategy is a reversal trading strategy, which means we are trying to identify when a reversal is happening in the market. And then we want to find a good trading opportunity to enter a trade. When the price is above the green line, we consider the market as trending up, and when the price is below the green line, we consider that the market is trending down. So the crossing of the price below the green line or above the green line is important to us because it can be the starting point of the reversal. So here you can see that the price was above the green line and then it went below the green line. So this is a signal that probably a reversal is happening in the market, but we don't enter just based on this crossing because we can encounter many false signals. We need more signal, we need more confirmation that can give us the confidence to say with higher probability that a reversal is happening in the market. So in this trading strategy, in a short position setup, in the first step, we want the price from above the green line, cross the green line and go below the green line. In the next step, we want both of the white channel and the orange channel also to go below the green line. For example, here, first you can see that the price went below the green line, but the white channel and the orange channel didn't go below the green line. You can see that the price again advanced, went above the green line, and then again crossed below the green line. And at this point, when this candle was closed, you can see that both of the orange channel and the white channel are completely below the green line. In other words, 4 of these EMAs, orange and white, all of them should be below the green line. Alright, now we have higher probability that a reversal is happening, but still not enough. And we want to be more sure and also have a good opportunity to enter a trade. In the next step, we wait for a pullback. The orange channel and white channel can also help you with this. The upper line of the white channel should go above the upper line of the orange channel, and similarly here, the lower line of the white channel should go above the lower line of the orange channel. When we have this situation, it tells us that probably a pullback is forming on the chart. Now we should wait for a signal that shows end of the pullback, and that is when the upper line of the white channel goes below the upper line of the orange channel, and similarly here, the lower line of the white channel is closed below the lower line of the orange channel. When we have this situation, it tells us that probably the pullback ended and the price is going to decline more. In cases like this where the crossing is not a clear cut and you're a little bit unsure, always wait for a clear signal. Never rush on your trading decision. So in this case, if you are unsure about the crossing of this white line below the orange line, just wait for a clear cut crossing like what happened here. So the reversal signal here is confirmed, and in practice we could enter a short position at this point with the stop loss above the green line and profit target at risk to reward ratio of 2. Please pay attention that this trading strategy is a reversal trading strategy, not a trend following strategy. So I don't recommend entering on the next pullbacks inside the trend, because although you can make also profit in these pullbacks, but this would be a trend following strategy which may need different settings or measures for trade entry, stop loss and profit. So in this trading strategy, which is a reversal trading strategy, we only focus on the first pullback after having the other conditions that I explained. Alright, now let me teach you a long position setup. For a long position setup, we wait for crossing of the price from below the green line to above the green line. This is an early signal of reversal, but we need more confirmation. In the next step, both of the white channel and the orange channel should completely go above the green line. When this candle is closed, you can see that 4 of these EMAs are completely above the green line. Now we should wait for a pullback. We want the upper line of the white channel to go below the upper line of the orange channel, and similarly here, the lower line of the white channel to go below the lower line of the orange channel. When we have this situation, it tells us that probably a pullback pullback is forming on the chart. In the next step, we should wait for a signal that shows end of the pullback. We wait for the upper line of the white channel to close above the upper line of the orange channel, and here the lower line of the white channel to close above the lower line of the orange channel. When we have this situation, it tells us that probably the pullback ended and the price is gonna advance more. So here the buy signal is confirmed, and in practice we could enter a long position at this point with the stop loss below the green line and profit target at risk to reward ratio of 2. As I explained earlier, in this trading strategy, which is a reversal trading strategy, we only focus on the first pullback after having the other conditions that I explained. Alright, an important point I must mention here. When we have a pullback, the white channel and the orange channel shouldn't go above the green line or below the green line in the case of a long position setup. For example, here you can see that the price from above the green line went below the green line, and after that the white channel and the orange channel are completely below the green line, and now we wait for a pullback, and you can see that the upper line of the white channel went above the upper line of the orange channel, and similarly here the lower line of the white channel went above the lower line of the orange channel. But in this case you can see that the white line and the orange line went above the green line. This is not a good sign, so we don't take any action here and we wait to see what happens after that. Again, you can see that same situation happened here, where in the pullback the white line and the orange line went above the green line. We don't take any action also here, and again you can see that the price went below the green line, and then the orange channel and the white channel are also completely below the green line, and now we should wait for a pullback, which is when the upper line of the white channel goes above the upper line of the orange channel, and similarly here the lower line of the white channel goes above the lower line of the orange channel, and in this case you can see that the orange line and the white line didn't go above the green line, so everything is okay now, and we should wait for a signal that shows end of the pullback, which happened here, where the upper line of the white channel is closed below the upper line of the orange channel, and here the lower line of the white channel is closed below the lower line of the orange channel. So the sell signal here is confirmed, and in practice we could enter a short position at this point with the stop loss above the green line and profit target at risk to reward ratio of 2, and you can see that this trade was also a profitable trade. Please pay attention that although this trading strategy is very accurate, but it doesn't mean you will not encounter false signals. No, this is not possible in reality. There is no trading strategy with 100% win rate. Losing positions are always part of the game, and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it is recommended by professional traders. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.